Hi everyone, let's go over my low time frame bullish and bearish scenarios and micro invalidated scenario, including potential trading setups. Starting with the low time frame Elliott Wave bullish scenario on Bitcoin, where I'm looking for this to be a wave 1, 2, 3, 4, eventually expecting a 5 to the upside, where still an interesting target for this wave 5 is going to be the highs of the range made in 2022 at about 32.4k. If you then look at this wave 4, what is very important is that we don't want to see price continuing to the downside right now, as then the more bearish scenario becomes a lot more likely. Instead, we want to see price move to the upside first in this particular scenario, as I'm looking for this to then be a zigzag, which is an A, B, C, 5, 3, 5 wave structure. Now in this particular scenario, inside this yellow wave B, we're then looking for an expanding flat. So it's a 3 wave, and then a 5 wave move to the upside, where this then can be a leading diagonal, which is a 5 wave structure, followed by a 3 wave move and then another 5 wave move to the downside, where this currently looks to be 3 waves, so maybe 4, 5, and then eventually moving up is a possibility, but you don't want to see it continuing to the downside, as candles closing below the 0.5 often invalidate a wave 4, and I now have the invalidation at about 29k for this wave 4. So you definitely first want to see price move to the upside at the moment, where if we look at this structure over here, so the wave B and then an expanding flat, which actually hit the target at the moment perfectly for an expanding flat wave B, which is the 1.236 and the 1.38, then what is important is this little structure over here. So if I pull a Fibonacci from the high of the white A over here to this low, and I put on the 886, which is the red line, you can see that price retraced all the way to the 886. So if this is a 3 wave in A, then looking at this to be a 3 wave in B before then eventually a C to the upside, then this is a wave B by itself in an A, B, C. Now the 886 for a potential wave 2, which I show in a second in the bearish scenario, is a rare target. But for a wave B, the 886 is a normal target. It's fine. So the moment an 886 is hit and price then continues, you always have to think, hey, might this be a wave B instead of a wave 2? So in this particular scenario, this might then be a wave B and then an A, B, C 3 wave move to the downside for then eventually looking for that C to the upside. So this is actually a very little important detail, because it makes it a little bit more likely that this is a wave B and therefore this whole thing is still a corrective structure. Now, as mentioned, if price moves to the downside and just continues down, of course that becomes invalidated. But now we would then be looking for upside in this wave C. Of course, price could go down once more and then move to the upside, but you're looking for at least a double top over here to be taken, if not hitting the target area just above between 30.7k and 30.9k, in this then being an A, B, C expanding flat. Now, as mentioned also in previous videos, double tops and double bottoms are like a magnet for price, so taking the liquidity over here would be quite nice, also because these highs were made throughout the weekend, this one on Saturday and this one yesterday on Sunday. So it would be quite nice if the markets are like, you know what, we're going to take the liquidity above these highs, we're going to trigger the stop losses of retail and whatnot before then going to the downside again. Because after this wave B and then an expanding flat in the yellow wave B, we're then looking for a C to the downside. Now, the most common target for a wave C is the 1-to-1 compared to wave A. So if this is the length of wave A, you expect about the same length for then this wave C. And what is important as well is if price now moves to the upside, finding support in the wave B over here, common target area, as well as the target box, we create a double bottom, because you then have this low over here and this low over here. So that would then be my main support area for this wave C, to then move up now, then go down, take the double bottom before moving up. Because besides the double bottom that price is then going to create, there is just not much support below these lows over here. As you can see, my next target box is all the way down here, which is between 27.8k and 28.2k. So that is quite a drop. And there's just simply not too much support below the potential double bottom that it is going to form if price first moves to the upside right now. Because as mentioned, if price continues to the downside, the bearish scenario becomes a lot more likely. So in this particular scenario, the potential trading setup is to ladder the longs in this area over here, stop loss somewhere safe before then a move to the upside inside this bigger wave B, where the main target is going to be, well, the double top as well as the target box that we have over there. Now, as I've mentioned as well, this can still be a 1, 2, 3, 4, and then another move to the downside for 5. So this is definitely a risky trade at the moment, also because of the bearish scenario I'm going to show you. So more risk, high risk trade, this one potential trading setup. Of course, it is purely educational, not financial advice. It's YouTube, guys. You know how it goes. So then the potential short scenario would be that if we move to the upside right now, the potential short scenario is laddering over here, stop loss above, trading it to the downside for then the double bottom, where then potentially a long scenario is again going to be valid. If we then go to the bearish scenario, we're looking at this to be the end of wave 5. So we then have a 1, 2, 3, 4, 5 wave structure over here, where a couple of videos ago already, when we were talking about price being in this area and starting to move to the downside, that this is the most common target area for wave 5, pulled from the high of 3 to the low of wave 4, so the 1.236 and the 1.618. And also volume was lower, so we actually had higher volume in this wave 3 than we had wave 4, and this wave 5 had lower volume than in this wave 3, this move to the upside in a wave 3. So if I actually zoom out just a little bit, you can see the volume a little bit better. So inside this wave 3, some nice volume peaks, and then inside this wave 5, volume is slowing down, which is exactly what you want to see in a potential wave 5 and also the potential scenario, for then eventually a continuation to the downside. So now we're looking at this to be a wave 1, 2, another 1, 2, before then a bigger 3 to the downside and continuation to the downside, where the target mentioned earlier all the way down here at about 28k is only a starter basically. So in this particular scenario, we then have this second wave 2 retracing to the 886, which is a rare target for wave 2, but not invalidated, right? It's a rare target, but not an invalidation. Usually, however, when I see a 1, 2, 1, 2 scenario, like this being a 1, 2, 1, 2, and then continuation, what I prefer seeing is that the second one goes below the first one. So what I prefer is this being a 1, 2, then another 1, 2 before continuation. In this scenario, however, this second wave, potential wave 1, did not take the low of the first wave 1, which actually is annoying to me, and also gives me a little, makes me feel like it's a little bit less likely, this scenario, right? I still maybe prefer the bullish scenario slightly because of what is happening over here with the retracement of this wave 2, this wave 1 not taking this wave 1. So yeah, in this scenario, you simply expect price to move to the downside, and the invalidation would be price moving to the upside and basically taking this high at 30.5, 30.6k. So you don't want to see price move to the upside in this particular scenario, because then the 1, 2, 1, 2 scenario is gonna be invalidated. If we then go to the micro scenario, this was the potential trading setup as well from yesterday, and that's why I want to talk about it, because when we talk about also trading setups and how to potentially trade Elliott Waves, because that's what I'm trying to educate you with as well, is how can you use Elliott Waves for trading. Of course, all the scenarios shown are educational, but I do want to show you how things work in practice. So if this was a wave A, looking then for B, and then looking for that C to the downside, then we had the potential trading scenario over here to enter the longs in this area, stop loss below, looking for this move to the upside. Now the moment you start to see this push over here is also the moment that the stop loss goes from down here definitely to at least below these lows, if not break even. So when price, just in case, goes to the downside, you're break even, and that is absolutely fine. If it continues to the upside to target, that is absolutely fine as well. So that is very important in this particular scenario from an Elliott Wave perspective. We had some volume coming in here as well. Also, gotta be honest, of course, I made one video yesterday because I had such a busy day and I was not in front of my laptop. And I made the video when price was, let's see, over here, when price was over here. So in this particular scenario, when price was still here, we still had the potential to move to the upside. But when I saw price going down here, move to the upside, that was the moment where I was like, yeah, this stop loss has to be break even now. Of course, I couldn't make an update, but hell, here you go. Stop loss has to go to break even just in case price moves to the downside, which I think is very important from an Elliott Wave trading perspective for the ones that do want to learn how to trade Elliott Waves. Once you see that push taking, especially this high as well, yeah, this is just important trading wise as well. And it's also important to trade safe, right? So yeah, this is what I'm looking for. I hope this video was helpful or valuable to you. I'd like to thank you for watching and subscribing, and I will see you at the next one. Bye bye.